Monday, October the 26th, 2009. Hope everyone is doing magnificent. It is 3:30 as of the time of shooting this video. The S&P 500 down 1.3%, but down over 2.5% from its highs at 10 o'clock, as the Dow was up about 100 points and a huge sell-off. Inverse relationship with the dollar going higher, stocks selling off just a little bit. The dollar is at the trend line now from its March and its April highs. If you draw a trend line that connects the March and the April highs, we're right at that now. It's the first time it's touched it since then. It still hasn't touched any of the main 50, 100, or 200-day moving averages, but it might be showing signs as if the dollar may have one of those bear market rallies. If that's the case, you could expect stocks to retrace a decent percentage anyway. How much, I don't know. But we now have the financial sector, which is down even more today. It is testing its 50-day moving average. 50-day moving average is very important because many traders look at this average to decide which direction it's going. We see these down days of 2% here or a 4% down period. And if there's a rising 50, people will be saying, you know what? If anything, this gives me a chance to buy, but I'm not going to sell yet because of the rising 50. That is the mentality for a lot of traders. So on a declining 50-day moving average, that could easily cause markets to start selling off. The last time that we had a declining 50-day moving average was right around the start of April. As far as the Dow is concerned, the companies that are now having a declining 50-day moving average, Bank of America, they've been hit huge today. Home Depot, Kraft, Verizon, and Walmart, while Alcoa, Boeing, DuPont, GE, IBM, Intel, Johnson & Johnson, JP Morgan, Merck, and AT&T are all testing their moving average or have a flat 50-day moving average. So seeing these companies reverse over could make markets start to retrace back a little bit. We had 11 banks fail last week. There's a link in the more info for the list of bank failures from the FDIC. I've never heard of any single one of these banks. It sounds like your mom and pop kind of banks, if anything. And we've seen the small ones fail. We've seen the small big ones, if you will, the Bear Stearns, the Lehman Brothers, the WAMU. They've all fallen down. And it's just a matter of time before Bank of America's on the list. And then you have Citigroup on the list and Morgan Stanley on the list. As these banks lent out way too much money, but nonetheless, the whole system is designed to get interest that doesn't exist, and at the same point they are also paying interest that doesn't exist when they create money from the Federal Reserve. I was asked recently about the stocks and the dollar. Why do they always reverse? Why, if the dollar's going up, why do stocks go down? If the dollar's going down, why do stocks going up? And the quick answer for that is, a lot of times when stocks go up higher, it's because they get the money from selling the dollar or selling into treasuries, and vice versa. When it goes up, they sell stocks to bring the dollar up a lot higher. Is the S&P 500 and the Dow Jones. This is the last year and change, and it is an inverse action. At the start of the chart, markets are going down, dollars going higher. Now we've seen the dollar falling and the stock market, which is going higher. Now if we look at some more of these, this is the dollar and the S&P 500 from about 2004 to the middle of 2008. Perfect inverse almost a perfect inverse relationship as the dollar rallied, as the stocks also rallied at the start though. So you can see that around 2005 they both ended up rallying. This chart here is from 2000 up for the first half of this decade, And they both fell down together here. You can see at the start both the S&P and the Dow Jones going down together. And if we take a look at the 1990s, they were both going up together. I look at what might happen on a dollar fall. Does this mean that the stocks are going to hit like 14, 16, 20,000 Dow if it's a serious dollar fall? Maybe. But then this is all about the $1,000 silver. It's not like you have 1 ounce of silver and you have what's considered a good weekly wage. Because $1,000, if silver's $1,000 an ounce, means it's not going to buy you a heck of a lot, just like the Dow at 18,000. But because they don't always work together, and in times of panic, it wouldn't surprise me seeing both stocks and the dollar falling at the same time, as long as there's a panic type scenario amongst the people and amongst the media. So thank you all for watching. Peace out and have yourself a great day, everyone. Bye-bye.